Hi everyone, and welcome to another edition of Between the Lines Live. I'm here joined, it's a really exciting one this time because we've got people from all different states where we're going to talk about the office market report, which came out just a couple of weeks ago, and what's happening with those results and office markets generally around the country. So I'm joined here today by a panel of great office leasing people in particular. So we've got Sean Hennessy here from RWC in Queensland, Luke Pavlos, who is here from RWC in WA, and we've got Jeremy Piggin, Director here at Ray White Commercial Sydney CBD Office Leasing. So welcome everybody.
Thank you.
Welcome.
Cheers.
Oh, it's so exciting. The office market is just really interesting at the moment. This is the thing that everybody's always asking me about. Work from home, impacts on the office market. And a lot of the results that come out of the PCA are quite staggering in terms of the change in vacancy rates. But the first thing I probably want to mention is I'm a huge supporter of WA in Queensland. You guys have done so well in terms of population growth over the last couple of years, and that seems to have done that office market quite well, and you're probably the best performing office markets if you're looking at take up and things like that. So let's start with Queensland. So Brisbane CBD, what have you seen?
Oh, look, I think Brisbane in general, the story is obviously with the Olympics coming and I guess the positive the stuff that's happening there. We've really seen a big uptake in tenant moves. What we're seeing is essentially as well that real fight for quality going up to that prime grade stock. The secondary grade stock is probably the one that's probably really getting left a little bit behind. But we're also seeing a lot of those fringe markets as well really come into their own.
Yeah.
And I think with COVID and what's happened there, and now getting back to the work back to normal, it's there's a lot of businesses are really trying to actually maybe venture out from the CBD as well.
Yeah.
But yeah, no, it's going strong, and I think it's been really positive signs for us.
Yeah. So the Brisbane CBD is one of only two CBD office markets that actually saw a vacancy decline.
Yeah,
So well done to you
exciting,
guys.
yeah.
It is. It's probably been a long time. Like you've kind of had high vacancy for a little while, a few kind of supply projects kind of prohibiting that improving. But great to see that's come down this period, absorption being quite strong. But like you said, the flight to quality, and I'm sure that's a story that you all probably can say as well. How about you, Luke? WA probably hasn't had the same kind of work from home issues as some of the other states have, particularly because you had that real strong border closure during COVID. So everyone kind of more back in the office, but vacancies what 15.9%.
Yeah, 15.9 at the moment. So no, we're travelling pretty well. We weren't affected too much by COVID over the period. Borders shut and allowed us to just get on with business in terms of that mining sector. The commodity prices are some of the highest they've been for a very long time, and they're fairly stable. So that's really helped to grow expansion of different mining projects and infrastructure projects, which have then filtered into the office market itself, companies taking more space. And off the back of that is, it feeds into other areas of business also, like your legal, your accounting, your engineering, those sorts as well. So it's been really positive at our end. We're not too much affected by that working from home either.
Yeah.
At this point in time, with I think the highest occupancy rate in Australia.
Yes.
But I think a lot of that comes down to as well the travel time to get to the offices. Most of our, I guess, tenants, most people live probably about 45 minutes to an hour from the office place. So the commute's fairly easy, and it's probably quicker by train really. So we're not too affected by that.
Luke talked a little bit about the kind of tenant types he's got there, probably a little bit different to all of the same for Queensland. Where's your inquiry coming from? What sort of tenant types?
Yeah, look, I think it's very similar in that sense, but it's not any particular tenant type. I think what we're really seeing is, I guess, the change in the tenants in what they're actually looking for within the office space. So, you look at, I guess, even we're talking about now coming back to what we're seeing is it's almost like tenant, when they're moving, they're actually looking to earn the right to get the staff back into the office. So that ties back to creating the environment, getting it, the fit outs, creating that real, I guess, a different vibe and a change that we're seeing from that stereotypical, just generic office space. So I think that's the real story. I think you've got to make a reason for people to want to come into the office.
And I think that story probably resonates with you, Jeremy, the most, because Sydney CBD has certainly been one of the office markets, Sydney and Melbourne, really the two that have been so affected by that whole work from home, and we still see the struggle now getting staff back into the office. Vacancy in Sydney, it's gone up, but We've got a lot of supply still happening in the marketplace, just like your markets as well. And a take-up has been in that prime space, again, that flight to quality. But what are you seeing, Jeremy?
Look, a lot of tenants are finding it a bit difficult working out their headcount and working out how many people are going to be coming in, how many days, what type of fit-out do we need to cater for those, what type of building, what type of culture do we want to create to attract all the staff back to the office. Depending on what sector, it does differ, like legal and IT are completely different in terms of their outlook and the way that they want to bring sort of things back. At the moment, there's a lot of sublease space on the market in the IT industry. And a lot of those IT companies don't actually need, they want to have space, they want to downsize, but they don't predominantly need to find space straight away. If they can get rid of a lease tail and then they can just either work from home or go into co-working, flexible office arrangements for a few months until they work out their exact headcount and what style of fit out that they need. So there's a lot of moving parts, different sectors have different sort of mandates, but certainly it's been a bit of a challenging year, but at the same time there are transactions happening. There are some good briefs in the market that their deals are definitely flowing, but it's just a bit of a different landscape at the moment.
Yeah, well, I think that there's probably a lot, because of this uncertainty, are you finding, maybe you get some inquiry, but they're really just kind of waiting and seeing, not really sure, because not sure what that headcount's going to be. Do I, do I cater for people coming back? Do I cater for them half coming back? Do I need more flexible spaces? Do I need more? But, you know, there's so much, and also to your point, bringing staff back in, you want to provide a workspace which is fun and encouraging. But what happens when they all do come in? Is there enough desks for them? What's going on? Is it just a more mixed bag?
That's where the more flexibility in the fit out, I guess. So I guess more collaboration zones and more hot desking, sort of more quasi breakouts / collaborations, and more meeting space as well. A lot of companies they do a lot of, I guess, sort of mandate where people come back on different days. So you don't own a workstation. You have some lockers, you put your belongings in those lockers, and you just you share the space basically with people coming back. So they don't need as big a footprint as they maybe did in the past. But that's depending on what sector again. I know with law firms, I mean they're becoming a lot more stricter in people coming back to work. But their fit outs are all changing as well. So gone are the days with perimeter offices around the tenancy. So that's more of an open plan environment.
And I think tying into that uncertainty as well, those small to medium-sized tenants, they're probably going for the shorter lease terms now because of that uncertainty on where they're going to be. Whereas probably looking for sort of those 3 to 5 year leases, probably more common than what they used to be because of that.
Is that across the board? Are we seeing the landlords having to be more flexible in kind of what these leases look like?
Yeah, absolutely. Look, I mean, before it used to be 3 to 5 years. Now it's you can do 2-year terms. Incentives now obviously are quite big compared to what they were historically. Well, they're not more than quite big; they're huge. So a lot of these owners are having to really be creative in trying to attract these tenants back into the market and lease out space. There's a lot of backfill space in the secondary market, big chunks coming up now. Tens of thousands of square metres, contiguous space in a lot of, some even A-grade buildings, B-grade secondary stock as well. So it's a time now for owners to really try and improve the amenity, refurbish, and just make sure that they have a product in the market that can attract new tenants moving forward. Yeah,
I suppose Sydney's in a really difficult situation because you are going to have those massive chunks of backfill, still some supply coming through to the market, probably not to the same level that you guys have. However, there will be some, particularly Perth, you've got some big buildings that are coming out of the ground. But we spoke, so that's the CBD markets. You mentioned about, some strength in your kind of fringe markets. And again, Brisbane fringe, number one, when you're looking at take up, absorption, vacancies have come back, still high, but like they've come back and they're looking pretty attractive compared to other markets. What's going on in that fringe market then? Yeah,
I think our Brisbane fringe market is really strong at the moment. I think there's also a lot of new developments that are coming into that as well, which is really driving those tenants to maybe look outside of what traditionally they've always been CBD tenants, and some larger tenants as well. So that's a really positive sign for us. But
why are they opting for that? Like if there's kind of deals on offer perhaps in the CBD markets, what's the attraction of these kind of fringe markets?
Oh, look, I think it's just, I guess, coming from my background, being down in Sydney, previously, it's very unique. Sydney, we're sort of bound by those three sides of water, and it's got those traditionally the North Sydney, the Sydney markets. Brisbane, is probably a little bit different. So tenants are sort of looking for that flexibility to be able to be in those other locations and not have to go on the CBD. I think that's sort of the really positive trend that's happening at the moment. Yeah. So tenants are actually going, I don't need to be in the CBD, and we've still got those amenities and everything around in those sort of near city markets like your West End, South Brisbane.
Yeah.
And
they're all pretty kind of funky places too. They've got that kind of supporting infrastructure that's there, and all the cafes.
Correct.
And food.
And I think the infrastructure thing's the big thing. So
100%.
as long as you've got that there, they're open to looking outside of the CBD.
And West Perth too. West Perth is actually number 2, I think it is, when you look at absorption. Like West Perth, like writing reports in past years was always, a really tough market. A lot of older stock there. Vacancies have been prolonged high. They've come down to, I think, 11% now. Like they're doing very, very well. So again, the same sort of question, like you have options within the Perth CBD, quite high quality, nice assets. Why are people choosing to go to West Perth? How is that working out there?
Well, West Perth traditionally is the junior miners sector. So because commodity prices are as high as they are, and there's further expansion, new startup businesses, etc. That's the area where they incubate. They all want to be around each other. It's just like a little village that they have. There's not a huge amount of stock there. It's about 400,000, and of that, I think there's probably about 100,000 of A grade and 200 would B. But the B grade markets, where the stock's moved, and I think a lot of that has been off the back of just reduction in owners' expectation on price as well. And a lot of owners have been proactive in that area, whereas traditionally they hadn't. Spent on lobby upgrades and spec fit outs and those sorts of things. New LED lights, and really started to attract those back in. And when you've got some good major tenants that move in there, then the others want to be around.
Yeah, it attracts.
Yeah.
But that whole spec fit out thing is actually pretty interesting. Like that's, if you're having trouble, there's a lot of tenants out there actually looking for that kind of quality fit out space. You're seeing that in Sydney.
Post pandemic, most owners are really rolling out as many spec fit outs as they can, anywhere up from 100 square metres to 1,200 square metre whole floor plates. It's definitely a formula that's working. It's basically restructuring how incentives are handed out. So they obviously can get economies of scale and do some really good spec fit outs on vacancies within the building. And then whatever's left over, they can basically give rental rebate or just give out some more capital for amendments as part of incentives. But to attract the tenants to the building, it just takes out all the hassle from the tenant having to do a fit out. And it makes it a lot easier for the agents to lease out the space.
Just talking on those non-CBD markets, we've actually probably got a really different dynamic happening in Sydney. So places like North Sydney and Parramatta are vacancies over like 23%. There's some beautiful high quality assets in those markets. So some of that prime stuff has still got high vacancies. So it looks like they're coming into the Sydney CBD market because we have seen that absorption, particularly like we said on that flight to quality, that high grade space. Are you seeing that? You're getting inquiry from out of the city?
We don't specialise on the big projects, but we do notice that there's a lot of pre-commitment on those big ones that have come out of the ground, which is obviously causing a lot of backfill space. But yeah, definitely that flight to quality. Everyone's been saying that now for the last sort of year or 2 years. That's a huge factor. I mean, the big instos need to fill up those towers. Those brand new towers are justified to investors. So they're giving what they can on incentives and attracting, doing all sorts of deals to get those tenants across.
And even this kind of the smaller end of the market, some of your inquiries are coming from outside of the CBD, or is it all kind of people moving around the CBD?
With the incentives how they are in the CBD now, which is quite larger than the CBD or than the fringe, definitely makes it more attractive to come into the CBD. Owners are way more flexible than they were, say, previously.
Yeah.
And they look at the covenant of the tenant, but more so, if there's normally around a 6-month bond, if not more, depending if there's capital towards fit out, could be a fit out guarantee on top of a bond. But definitely tenants outside of the CBD taking advantage of the higher incentives.
Yeah, well, I'm from Sydney, as you know, but I just feel like the city's a little bit more livelier in the last couple of months. It feels like there's kind of more happening, a few more little cafes like popping back up and things like that.
I was going to say hospitality is a big key in Sydney as well. There's a lot of new restaurants and bars and cafes opening up. And I think that depending on the age demographic, but I think a lot of the young people are just sick of being at home too, and they want to come back to that more social environment.
Yes.
But you still notice on a Monday and a Friday the trains are a little bit more empty.
Yeah. Well, I look at those train statistics, and it's like that Monday and Friday is pretty quiet, but it's funny that everyone comes back into the city on a Friday night on a train.
Yeah.
They won't go to work all day, but they'll come in of an evening because there's a few more things happening in the city now. Because even the council and stuff been doing things to attract. We've had Vivid, and there's a lot of reasons to come into town. But we spoke just briefly. I think you mentioned it, Jeremy, about this kind of using co-working or spaces as an alternative in case you kind of needed more space. There's been a few changes. I think WeWork might be moving out of a few places.
Yep.
But what do you see in that sector of the market? Is there still a place for that collaborative sort of flexible
There's
space?
definitely, yeah. Look, they're growing. They're taking multiple floors in buildings. There's always going to be that demand for companies for a whole raft of different reasons. Sometimes it's just a few months just between offices. Other times it's a step for a smaller company to work out what headcount they're going to be. So they might be in there for a year or two. And then when they get to a certain headcount, it doesn't make economic sense to stay there because they're getting all extra charges for meeting rooms and whatnot. So there's different reasons for it, but there's always going to be demand for flexible workspace, yes.
Is that the same thing that we've seen in WA and Queensland?
Yeah, definitely. The flexible workspace has grown sort of exponentially. We've got a few big brands in Perth. One's a local brand as well that's growing. I think they provide a good service, particularly for small businesses starting up as well. It's an incubator service for them to then go off into traditional office space. At the same time in Perth, the whole reason, say, WeWork went into Central Park was to target Rio Tinto in terms of their expansion contraction space.
So like project space, if you like.
Exactly. Yeah. So definitely a market there for it because the market's always moving. And in terms of having, I guess, meeting rooms and those sorts of things, which everyone can use within the building, as opposed to having them within your own suite, I think that's a lot of the way that the owners are sort of looking to go, particularly in the premium space now. They're looking to have floors purely of meeting rooms and boardrooms and such, so that just becomes a common facility for the building.
Yeah. So you can just book those spaces as you need them rather than have to pay rent on them continuously.
Yeah.
I think what we're seeing as well is it's not so much just a complete shared space in that service office sphere. They're actually wanting their own space within the service office space, which is interesting, so that's sort of a bit of a change as well.
Well, that's interesting because then if you get to a point where you want that, when do you just make the jump then? And then particularly if you can get like a 2-year lease or like those kind of shorter term leases, make the jump and actually go to a different facility. Do you have many of those facilities in those kind of fringe areas? Because given they're a bit kind of funky and stuff, are we seeing more of that in those fringe markets?
In Brisbane we've seen a lot more of that in those near city markets.
Okay.
And sort of to Jeremy's point, there's a lot of new operators coming in that sort of smaller sort of co-working near city markets.
Yeah. Well, I've just done a piece this week that will come out today, actually, on Thursday, and talking about that prime versus secondary, the take-up of space, and there's such a clear swing. So while Sydney CBD for the last 12 months has seen like negative 60 or 55,000 square metres of take-up, when you look at the number, it's actually, 25,000 positive in prime and then this massive negative in B. Similar sort of trends in all of your markets, to be honest. The only one that doesn't do that is Melbourne, because Melbourne's such a basket case. Just negative on all sides, and they keep on building new buildings. So we've got no one from Victoria here, so we can say that. Yeah. Tough market. They don't really like they like working from home as well. So that's a whole completely different section we can talk about. So we talked about the flight to quality. What's going to happen now to these B, C, D-grade buildings in some cases, which make up a very large chunk of these CBD markets? What's going to happen to those? Are we eventually going to get to a point where those they just get filled up, and then we'll have, like it still seems like a long way away. We're still talking about high vacancy rates here, so it's still going to take some time for those prime markets or those premium markets to be taken up. Affordability is at play. I know that you talked about incentives are definitely in the marketplace, but what's the future plan for these B, C, and D-grade buildings?
I think that owners are going to just have to look at spending money on really improving the amenity within the buildings, and and just refurbishing lifts, refurbishing ground floor lobbies, putting cafes in lobbies if there's, depending on the floor plate sizes as well, because there's always going to be demand for a smaller tenant. Some 200, 300, 400 metre tenants like having their own whole floors. So that demand's always going to be there. But in terms of what's going to happen down the track or making your building a competitive product in the market, you've got to spend money on it.
Yeah, I agree with that. I think it's the owners that are proactive in actually doing those works, creating the fit outs, and also meeting the market. And the other story we were talking the other day is, you're seeing now with renewals as well in those secondary rate stock, the owners are basically, it's the same as a new deal. Yeah. Which is a big change.
Yeah, we never used to see with renewals incentives as high as they are now. Like they're pretty much on par with attracting new tenants. So there used to be around the 20% for incentives on renewals and 30 plus for new tenants. Now it's very on par.
Yeah.
But you basically have to do it because there's so many spec fit outs getting done, that the tenant can easily pack up and just move into it. Owners need to be competitive. If they're not being competitive, they'll lose the tenant because the B grade tenants, they just move to the cheapest deal, the best offering for them.
Yeah.
So in terms of WA and in that stock, 100%, you need to repurpose the building, upgrades, throw money into end-of-trip facilities, cafes, lobby upgrades.
Sorry, repurpose the building to something else or just to
Both.
Completely? So what are the options in Perth, do you say, for repurposing?
There's a few buildings in Perth which are being changed to education facilities.
Yeah.
Yeah, there's one that's been used as a secondary school. Okay. Another one being used as a college, and they take big chunks out of the market, and most of them tend to be owner-occupied. Okay. So there's a big owner-occupiers market for that sort of stuff. But, they're spending money in there and repurposing them. Or from a landlord's point of view, like we said earlier, you just need to make it relevant. It's like anything. If it's a shopping centre, you've got the shopping centre getting built down the road. You need to make your one relevant to attract people back.
Yeah.
And so it's the same with office.
Yeah, that's the same in Queensland.
Yeah.
Yeah, those that have been kind of putting their money, especially West Coast is a good example of that. Those assets that actually have had that capex done to them, they're the ones that have been taken up quickly.
Yeah.
Yeah.
It's noticeable by tenants. They just walk in there and go, wow, the lobby's amazing.
Yeah, and there's a cafe there.
Yeah, even as simple as, forget the B grade, even like Central Park, for instance, went through an upgrade. They're doing the recladding of it at the moment. The lobby area, they've done an amazing job. Awesome cafe in there, heaps of breakout area for people to sit around and just work casually. Their biggest tenant's Rio Tinto.
Yeah.
And they've got WeWork that takes up about 8,000 square metres as well. So off the back of that, you want to be trying to hold those tenants, and if you're not going to, spend money on your building and make it relevant to market, then you're going to lose that to a new build down at Elizabeth Quay, for instance. Yeah. So, you need to make it relevant.
Yeah, like I said, it's going to be hard for a lot of markets. Like I mentioned, like kind of North Sydney and Parramatta. Like Parramatta had so much new construction go on there. Like half the market is now A-grade stock. So what do you do when your B-grade market's like 41% vacancy, which is where it's at the moment? It's a tough time for some markets, and really what's going to go on there. It's one really just don't really know the answer to it. It's just really a wait and see. So I want to kind of put to you, so what's the future hold, or what do you, I just feel like it's so uncertain and it could kind of change. I think that markets like Perth, you seem a bit more settled in terms of you don't have that work from home issue. Employment's still doing well in WA. A lot of things going for WA. I'm always spruiking WA. Highest population growth, 2.3%, followed by Queensland, 2.2% last year. Forget about Sydney. But which is doing good for your economy. It's doing good for a lot of different asset classes. In particular, we're starting to see that take up while it's, vacancies are still high. So what's the outlook? We much the same? Is that what you're thinking for Perth? I'll start with you, Luke.
Yeah, I think Perth over the next 12 months, again, going to be a very positive story. We do have a fair bit of prime stock coming to market. Chevron's obviously moved to their new build down at Elizabeth Quay. Brookfield started on tower next door, which they've already got some pre-commitments on. So they'll come out of A-grade offices and leave some holes.
So you'll have
there
some
as well.
backfill holes
so
as
we'll,
well.
We'll definitely have some. There's about 70,000 square metres coming on 2023.
Yeah.
And basically, I think it's 70,000, and there's about 90,000 coming on, over the next 2 years. But it's that flight to quality.
Yeah, I feel for the Perth market though. Like I feel like every time you start to kind of improve a bit, there's more buildings being built, and I understand. But it's keeping the vacancies at prolonged kind of highs. Incentives is, commonplace in the market. But what's happening with your net rents? Can we talk about where are they pretty much staying the same?
They're fairly stable. If not, they've actually increased a little bit. And I think the increase is a slight, it's not 100% accurate. It's more the fact that the construction costs of fit outs and such.
Inflationary pressure.
Inflationary pressure has gone into it. So you have to recover it somehow.
And also, just talking on that, when you're doing your renewals and things, what are your tenants looking for in terms of what does that lease look like? Does it have market rent growth? Is there a fixed rate? Everyone's staying away from inflation when it comes
funny
to
enough, the
rent growth.
The government policy used to be that they'll only accept CPI reviews.
Oh, wow.
And now when you put CPI to them, they're like, no, we want fixed. So you're usually sort of ending up at around about 3 or 3.5% with one of those deals. But generally, market is fixed for the term for at least 5 years. Anything more than 5, you might throw a market review at that 5-year mark. 7 years, you may do, but generally for a 10-year term, there would be a market review at some point. But there's probably going to be a collar cap in there or something like that, depending on who's done the deal. Tenant rep will always act in the best interest and try to skew them down a bit. But that's sort of where it sits at the moment.
And how about Queensland? What a Brisbane Fringe?
Yeah, look, I think Brisbane, as you spoke about, is a positive story, but I think even on the long term, with the Olympics coming and we're seeing a lot more new tenants come to the market as well, and I think our rents, our effective rent, we've had a really good growth in that.
Yeah, great.
We've got a lot of pipeline coming through, and I think that's sort of where those tenants and that backfill is probably going to be the issue in that secondary stock. So that's probably our biggest issue in that. But other than that, it's good.
Also, I'll just do a plug for Gold Coast. We're going to actually be talking to the Gold Coast guys next month, but Gold Coast remains like the top office market.
Yeah.
Vacancies at 6.3. It's even less for prime. So it's a much smaller market, but how's that? That's the whole kind of people moving up to Queensland. Like I've been saying for the last 12 months, Sunny Coast and Gold Coast best performing office markets. It's getting a lot of press because it's true. Like everyone wants to be up here. So that's the key. And how about you, Jeremy? What's your thoughts? The next kind of it's hard. I find Sydney just really hard. You don't know where it's going to go. We've had banks trying to enforce staff back in, CBA 50%, NAB, depending on kind of what kind of level you are.
Yeah, I don't think that the dust has settled yet.
Yeah.
I think there's a good year or two left to go before we really know how the market's going to perform without the impact of what the pandemic has had over the last couple of years. There's the whole landscape in the CBD is changing. There's with the metro rail system and all the office space going up above those stations. There's been the most progressive construction that I've been working in the city over 20 years. I've never seen anything like it.
That's funny because like as soon as they were doing Barangaroo, that was like never seen anything like that. Like such massive, a whole new part of the city. So much construction, beautiful, large office buildings, huge floor plates, a lot of big tenants going there. And now, subsequent to that, like you said, Metro, we didn't even mention that. Like that's completely changing the face of Sydney. And I think we have to wait to see some of that actually done so people can, I don't know, does it feel like that to you? Like you kind of, we need to see it a little bit more.
It's been
down
just
the
a
line.
big construction site the last few years.
Like looking outside our window in the office, it's just like this kind of
Yeah.
mess of, and so I can understand why some people are kind of like, I don't really want to come in today, it's raining, I'm going to have to walk through this,
Yeah.
Sydney people are a bit pressured.
But I think there'll always be demand in Sydney. I think Sydney it's obviously the largest CBD in Australia, and it's probably more recognised as an international city, more so
100%.
than other cities in Australia. So, there's an attraction there from an overseas point of view. A lot of head offices are based in Sydney, and I think that that won't change.
That's
so, we'll definitely see a lot prettier aesthetic sort of look to Sydney CBD in the near future, which is great.
Yes.
And that's going to attract a lot of people back to town.
I tend to totally agree with you that's I think that's been a bit of another stumbling block that we've had here in Sydney. But let's end on some of the rents you spoke about. Like we've mentioned incentives. What's happening with rents? You're still seeing actually face growth in that
we are.
kind of
We're
prime
seeing
end and
some
premium end.
net face growth, especially in prime grade.
Yeah.
We're now seeing some rents on the high-rise premium of net over 2,000 a square metre before outgoings.
Let everyone just fall off their chair for a second.
On the high-rise. So that's definitely, and tenants, like smaller boutique sort of private equity or little fund financial services business will pay that, no
Yeah.
problem, and they'll get a market incentive. But there's definitely demand for that at that level. So yeah, rents. I think net effective rents have stabilised,
Yeah.
if not coming down a little bit.
Yeah.
But face rents are definitely not going down.
And on those rents, are you finding like a tenant's okay, or there's a lot of pushback on that, or are they
Not on the
accepting?
face rents.
Yeah.
Always, the incentive, there's always argy-bargy, but not on the face rents. They're set at what they are, and there's always, if someone does like this, someone else that'll come along and take it. So
Yeah.
Well, and if they don't like it, there's plenty of backfill space that they can
Yeah.
inquire on as well. Or some new assets coming into the market. But anyway, guys, I think that probably wraps us up for today. What an awesome discussion. I really enjoy talking all things office, and it's great to have people from different states here so we can see what's going on in different places. Again, massive supporter of WA and Queensland. That whole population growth just makes it so easy to talk about, and being a Sydney sider, love having you on, Jeremy. So thanks so much, guys. And thank you for joining us. And next month we'll be in the Gold Coast, and we'll be talking to the guys on what's happening in the office market, and also just generally all the commercial and the residential development side of things on Gold Coast. So make sure you register and stay tuned for that. Thanks, guys.